Greetings, Dwayne, CFRN. Today is Monday, 23rd day of April, 2012. It's now 7:39 p.m. Pacific time. We are looking first tonight at a daily chart. Back on April the 10th. Actually, we first brought it up on the 9th. We said we had a potential short setting up on the daily chart, one that we had not had since back November, December-ish. Okay, pretty steady climb first quarter of this year. We developed our bearish cross, we got our pullback, we had our entry, and the first short move dropped us from 83.25 down to 60.75. So roughly about 23 point move. A price rallied right back to the BBC, where it again sold off, this time a little deeper. The secondary entry was at 13.80 and we dropped to 13.53.25. That would be 27 points on that second move. First pullback and a drop. Second pullback and a drop. Now we have potentially, see, here's the first pullback and a drop. Second pullback and a drop. Potentially in the making right here would be our third pullback. Now this third pullback is going to be pretty important because I want you to look at it this way. The market attempted to rally higher and could not. It was stopped by the BBC. Okay, backed off, gathered some strength, made another run, again stopped by the BBC. Okay, back up, regroup, gather some energy, make another run. Okay. Now what's happening over this process, although this last push did put in a slightly higher high right there, we put in a higher low from here, but a lower low from here. We're starting to get a slope here. Okay. Now, because we've stayed in a bit of a zone, and it's a big zone because it's a daily chart, the MA1 is flattened out. It's actually turned blue, but look at the slope. Okay? The slope looks as though it wants to turn down. Now, if we rally tonight and into tomorrow, that slope will change. Okay? But this is what you've got to watch overhead right here. If we get rejected a third time, as we rally up, or as we go sideways and the BBC drops, then the potential for us to not only take out the lows here at 53 are a possibility, but then the next thing we would look to do to come down, potentially challenge these lows at 13.33. None of these are weekly trading zones. I'm just using my horizontal line tool to point out these price areas for you. Okay. All right, we're going to move now to the smaller time frame. Just want to give you a big picture look at what's going on, where we're at. We'll go to a smaller time frame and just walk through all the trades of the day, as we do every day. Alright. Back it up to midnight. Okay, this was the Sunday night Globex Open, April 22nd. Today's April the 23rd. Let me just throw a horizontal line in here to make it clear. I'm sorry, a vertical line. Price pulled down, it pulled back up. We were already in a we had a bearish situation on our hands because the MA1 was below the BBC. We never got a bullish cross. Okay. Price pulled it up here, but then on the open last night it gapped down. We got to pull back, and you've watched enough of these videos by this point. You know that's an entry to go short. At what price? Well, you know, like it's 1374, 75-ish, you know, somewhere in that area, right? No. We know exactly where the entry is. It's exactly 1374.50. Because our indicator, when this pulled back, right over here, big green box said 1374.50. There was no question. Okay. Now, whether you took the trade or not, that's always a question. That's always a variable. Maybe it's a Sunday night. Maybe you weren't even in front of the charts. Fair enough? Fair enough. Where does price go from there? Well, it drops. Good thing we're in a short trade. Okay, let me do it this way. Price drops from 74.50 to 57.50. We also had a tweet last night that was good for 17 points, I think it was. Let's see, I got it right here. Yeah, last night's tweet was to be short, to consider being short 1370. It's a 16-point drop. I stand corrected. Okay. All right, over here we're at 74.50 minus 1357.50. No, that's not correct. 1374.50 minus 1357.50. All right, so we've determined that was a 17-point drop. What do we call that? Maximum potential? Yeah. Well, how'd you know to get out right here? You didn't. Price then pulls back to the BBC at exactly 1360.50. Creates a second short entry. There is a 2 to 3 tick drawdown on the trade. Price continues in a southerly fashion. Down to 1354. Let's do the math. 1360 minus 1354, 6 points. Okay. And it's now 9 o'clock Chicago time. Market's been open 30 minutes. Here's where it gets rather interesting. So stay with me. Price pulls back. $13.56 1/4. Price drops to $13.54. 2.25. Maximum potential. Okay. Now, then what happens is price pulls back again. Okay. Well, let's say you took this short trade right here. Not going to give you any reason why you shouldn't. I'm not going to talk about any of the filters that we use. I'm not going to talk about weekly trading zones or slingshots or anything. We're just going to say you took the trade. Okay. At $13.56 1/4. As soon as this crosses back over and you start seeing this back and forth motion, you gotta start questioning, and all of this time elapses. Pretty sure you're questioning if you should be in this trade. But based on this, we said we're in the trade. Now you and I know that we risk exactly how much per trade on this setup? 2 points. So that means our stop is going to be $13.58 1/4. Correct? See that? $13.56 1/4 was the pullback entry. The stop got hit at $13.58 1/4. Pull back here, go short. Now, could you have gotten out right here? From 56 1/4 to 54.50. That is, I don't feel like doing the math in my head. I know that makes some of you laugh. That's 1.75. So was there 1.75 maximum potential there? There was. And I'm going to put it there because it's the reality. Now, wait a minute. If I'm going to do it, I'm going to do it right. There we go. Let's try that again. 56 1/4 minus 1354.75 is 1.5. It's 1.5, 1.5 points maximum potential in the trade. If you didn't take the 1.5, now stay with me because this could get confusing. If you didn't take the 1.5, by the time you got to here, because this entry was 56 1/4, at 58 1/4, you're stopped out to the tick right there. Okay. If you did take the 1.5, or you took a point, or you took 3 ticks, or whatever you did, then price bops along. Then there's a bullish cross. There's some air. There's a pullback to 1356.50. And price goes to 61 1/4. 61.25 minus 5650, 4.75 maximum potential. Now, without any training, without any filters, without anybody to coach you, without a lot of screen time under your belt, as opposed to getting 4 3/4 point, well, number one, we already discussed the possibility or probability that you're going to get maximum potential in any trade, slim to none, right? We already covered that, okay? Now, over here, when this pullback comes along, there's a really good chance that you got chopped up in this part right here. Okay. So even though this gave 1.5, now that's real. And Michael will probably question my sanity that I would take it off and call it a stop. But my goal here is not to just show you some pie in the sky kind of a thing. I want to show you something that not only you can believe in, but something that can actually work for you. Okay? So I just showed you a trade that had 1.5 points of potential. The entry was really signaled there, and it really traveled that far. But you know what? Call it a stop, because it turned right around and the market handed a nice 4 3/4 point maximum potential move. And then what happened? Price pulled back, signals another long entry right here. Okay, got a faulty error. Let's get another one. Where does price pull back to? $13.58.50. Price then goes to $61.75. Let me make sure, because it's really hard to see bunched up there. No, it goes to $60.75. 60.75 minus 58.50, 2.25. $2.25 maximum potential. Okay. Now, if you hadn't got out there, if you'd have just stayed in the trade, would you have gotten stopped out? Let's see. The entry was 58.50. The drawdown was 57. That's a 1.5. You know we always allow for 2 points. Right? And so since we always allow for 2 points, you would have remained in the trade. So we have got our bullish cross going. We get a pullback. We get a secondary entry, which moves up 2 1/4 points. We then get a pullback. Now here's the thing. Once this once this pulled back here, it didn't create a long entry here. If you want a little more in-depth explanation as to why, come to the live trading room and I'll explain it. Take the free trial, cfrn.net/apply. So we had a 2 1/4 point maximum potential move, and then we have a pullback, but it doesn't really create a long entry for us. But because it's difficult for you to understand why it didn't create that entry, And if you got in here at 59 and it came back to 57, you got stopped out. Okay, so I'm going to do you a solid, as they say, as guys who have street cred say. I'm going to say you got confused. You took the trade by mistake and you got stopped out. What a guy. Okay, pull back, long entry. You know the drill. Pullback entry is 61 1/4. A little bit of a drawdown. The drawdown is to 60, so it's more than a little bit. It's a 1 1/4 point drawdown. And as of 8:01 p.m. Pacific time, Monday night, April the 23rd, price has gone up as far as 67.50. So 67.50 minus 61 1/4, 6.25 maximum potential. Okay. Let's go back and count out how many times. Let's get the lines out of the way because they're not important at this point. How many times did we get stopped out? There's one. Not really, but we're calling it one because I know it could have been confusing. There's one. There's two. That's it. Stopped. I need a higher typist. Stopped out 2 times equals 2 times 2 equals 4. I'll make this so complicated. Now I always like to throw in a tick of slip for each stop, right? You see me do that every night. So that's going to be a half a point plus 0.5 equals. This is going to look really confusing. Oh, yeah. I'm not even going to try to straighten it out because I'll just confuse it more. We got stopped out 2 times. 2 times 2, that's 4 points. Plus a tick of slip for each one that got stopped out. So total 4.5 points negative. Okay. Now let's add up the day. Maximum potential. I know what some of you are thinking if you're watching this video for the first time. We're going to clear up maximum potential real good before we're done. There's 17 plus 6 plus 2.25 plus 4.75 plus 2.25 plus 6.25 equals 38.5. $38.5 points maximum potential. What does that mean? It means that our system, if you want to call it that, methodology, price action really, signaled We don't think we normally count the number of trades. Let's go do that. There's 1, 2, 3, 4, 5, 6, 7. Okay, our system told us 7 times to be long or short to the tick. So with 2 stop outs, 9 trades total. 9 trades total. Yeah. Okay. All right. However, even though we know every entry to the tick, there's never any ambiguity. It's not like, 74, 75-ish area, that's probably where you want. No. It tells us exactly to the tick. Okay? So we know where we're getting in. Question is, where are you going to get out? Okay? Going to get out after you get your 2 points? Nothing wrong with that. After you get this twin tower reversal right here, are you going to bail? Good chance. Very good chance. Or are you so astute? Are you such a superhero trader that you wait for this little doji right here, which signals the end of this run, and you get the whole 17 points? Bada boom, bada bing. No, that's ridiculous. It's not going to happen. And you go, but wait, you just showed us it really did happen. I know, but I'm talking about reality. This is after the fact, okay? Did everything set up in real time? Was the entry price signaled in real time? Did we know we were supposed to get short right here? Yes, yes, and yes. Did the market fall nicely? Yes. However, without something else, you don't know when it's time to pull the plug. I mean, maybe you just wait till you get back here. And so it's still a lot of points. Or again, you got out over here with a couple points. Is either way right or wrong? No. You have the freedom to choose. The point I'm trying to make, in case this is the only one of this video series you ever watch, is that I'm not trying to say you're going to take 17 points out of a 17-point move. I'm saying the chances of you taking 17 points out of a 17-point move are slim to none. That goes for the 6 points, the 2 2/4 points. Now you're going to always get 2 points on the stop, because we don't let it go any further than that. Are you going to get 4.75, 4 3/4 points? No. Can you get some of it? A little of it? Most of it? Yes. And why am I so meticulous and such a stickler for pointing out this fact? Because nobody else does. And it's wrong that they don't. And I just want to do the right thing. That's what I teach my son. I ask if you could walk up to my son on the street and ask him, why do you do the right thing? And he would give you one answer only, because it's the only answer he knows. You'd say, why do you do the right thing? And he would look you in the eye. He would look you in the eye and say, because it's right. And that's how I feel about this. And then the final has 6.25 maximum potential, of which you could have taken something if you stayed in the trade a long time. Now, I can tell you this. You got in right here. You didn't get out here. By the time it got out here, got back to here, you're probably just saying whatever little market prayer it is that you say, thank you, God. I'm out at break even. I'll never trade again. They don't do that. Okay? If you want to aggressively manage a trade and get out at break even, do. There's nothing wrong with that. Don't make false promises. Okay? Does the market ultimately climb 6 1/4 points from the entry? Yes. Could you have taken any part of that along the way? Yes. And so we have on the board for this day, 38.5 points maximum potential. But since we know that's not reality, what are we going to do about it? Okay, the best I can do is throw half of it out the window. That's what I do every single night. 38.5 divided by 2 equals 19.25. $19.25 realistic potential minus our rounded up 9 points that we got stopped out, which leaves us a grand total of 10.25. Realistic potential net. And that's before commissions, by the way. This has nothing to do with money. This has to do with points. Now you might go, well, gee, that seemed like an awful lot of hard work to only get 10 points. Well, just one trade went 17. Another one went 6.25. I'm not saying you're going to trade bell to bell. I'm not saying that you're going to be in front of the screens to take every trade. And I certainly don't think you're going to milk every tick out of every opportunity. This is what the market presented. Maximum potential, 38.5. With 2 stops and a little rounding up. Oh, wait a minute. I'm sorry. I'm not going to cheat myself. I want to be fair, but it was 19.25 minus 4.5. So 14.75. If I'm going to make it realistic, then I'm going to make it realistic. 14.75. And for some that might still, well, I don't think that's realistic that I could get 14.75. Huh, I'm so glad you brought that up. Okay, but if you knew that the day held 14 3/4 points of realistic potential, could you maybe get half of that? Or, I don't know, maybe you could get 25% of that? That's 3.5 points. Now, when you're learning to trade and trading one lot, 3.5 points doesn't get you too worked up unless you look at it properly. If you look at it properly, it should get you very worked up, because if you can consistently achieve 2 or 3 points a day, day in and day out, and maybe you have the occasional not so good day, but by whatever measuring stick you use, weekly, monthly, quarterly, you average 2 to 3 points a day. Friend, that's a strong living. Okay? Very strong. So, don't look at this and go, well, gee, I don't know if I could really get 14 points. Ask yourself if, from what I showed you tonight, could you get half of that? Better yet, could you even get 1/4 of that? Now, don't forget, we already threw 50% out the window. So, if we throw 50% out the window and then I ask you, can you get 1/4 of this? Really what you're getting is a little better than 10% of all the potential that existed in the course of the day. You know, that's something you've got to figure out. I do know this. The first step is to go take the free trial, cfrn.net/apply. It really is free, no credit card required, no obligation, no hard sell. Not only do you get to spend 5 trading days in the live trading room with us, 2 hours a day, and you don't have to start on a Monday to get all 5 days. If you start on a Tuesday or Wednesday, that's fine. We'll still give you 5 consecutive trading days. You'll also get to download the platform, all the indicators, and you'll have live data, not delayed, but live data for the E-minis, lumber, livestock, grains, metals. If you're a Forex trader, all the currency pairs, you name it, we got the data feed for it. If it's Forex or futures, we got it covered, okay? And you get it at no charge for 1 full week. You also get a state-of-the-art simulator that allows you to not only shadow any trades that we might make in the live trading room, but since we're only trading live 2 hours a day, there's 22 hours a day when data's flowing, and you can be using the platform, using the charts, using the indicators to put on your own trades. How do you get to Carnegie Hall? Practice, practice, practice. Same thing applies to Wall Street. Come on in, take a free trial, get some practice, turn over the stones, kick the tires, see if what we have can work for you. I'm Dwayne. Come see me, cfrn.net/apply. I do hope to see you in the live trading room.